Yeah, I listened to. There was another one I listened to when we first met. It was around the Chris Kelly one, which that was on obviously a lot of.
What'd you
people
think
there.
of that?
It was great.
Did you watch the Chris Kelly Teddy Daniels thing?
Yeah, that's what I mean. Why was he on the podcast too?
No, I'm gonna get him on. People think I'm nuts for getting him on, but would you be cool with Teddy coming in?
I'm cool with anybody coming in.
Yeah. So that was a weird one because I don't know if I told this story before. I don't know, maybe I will. So I was in a really weird place. I think it was like episode 10 or 11 that we did that. And I was so upset with like the division of everything. And I was like, okay, so what you have is you have an alpha male. You have two alpha males, right? Who don't agree. And what they're doing is that Teddy Daniels is making videos and making comments about the Scranton Times. And he's doing it on social media. And then Chris Kelly is using ink by the barrel
newspaper
to respond to Teddy Daniels, which I thought was nuts.
So silly.
Right. So Teddy eventually calls him out. Chris agrees to it. Right. So I call up my buddy Mark Payne, who owns the meeting place was going to be Mark Payne's garage. I have no idea how he got involved in it, but it's right down the street. So I called up Mark and I was like, hey man, I'm really concerned that this would be a shit show. And I think it's really important though that people hear whatever conversation they have. And I'm a crazy person. So why not have me do a podcast of the thing?
It was a genius idea.
Yeah. Here, pull it up to you. Don't be afraid to have the microphone by you.
Are we on? Right
Oh, we're always on.
We're always on.
We're always on.
Oh,
Yeah.
Is this the episode?
Yeah.
Oh, okay.
So
Welcome.
So I packed up my stuff and I went down there on the day and I told Mark, I said, there's Chris Kelly's not going to respond to any of us about this.
Yeah.
I'm like, but ask Teddy if it's okay. And he asked Teddy and he goes, I didn't hear back from him. I said, okay, well, I'll just show up. And if, he says, okay. And if he doesn't, he doesn't. And it's no big deal. So I got there an hour early. Teddy shows up and I'm like, hey, my name's Mark. I'm like, we have this goofy podcast. And I'm like, but would you mind if we record it? Because I think it's important that, we hear about the differences that you guys have and blah, blah, blah. And he goes, I have no problem with it whatsoever. I said, okay. I said, now, if Chris comes in and says, I have a problem with it, we're just not going to do it.
Yeah.
And he goes, okay. So in the midst of all that, and then Chris shows up, it was so weird, man. It was such a weird environment of just having like these two monoliths. And then it would have
been so much weirder though if it was just a conversation in a parking lot.
Yeah, it's like
it was like,
really weird.
It's like
50,
in high
60
school
people
where you
showed
show
up.
up to a fist fight or something. You're not sure what's going to happen.
Yeah.
Well,
It's going to be weird.
So what you have is you have like 50 people who voted for someone,
Mm-hmm.
and then you had Chris Kelly and like a dude, and I'm like, oh, this is it's off. Like there's not an equivalent amount of people here. So I knew like my job was to keep the peace a little bit too. And to Chris's, what's the word?
Credit?
Yeah. Good thing we're here talking about finance. So to Chris's credit, he came in. I had it all set up. He came in, and the first thing he goes, it's a setup. And I went, it's not a setup. If you don't want to do it, we won't do it.
Yeah.
And he goes, well, we'll see how it goes. Like he was real smug about it, right? So he sits down. But what eventually happens is like these two dudes have a conversation, which is important. And every time the crowd went crazy, were you nervous for me a couple of times?
No, I thought it went pretty smooth.
Yeah, because they're not bad people.
Well, to be completely honest, like if we didn't have that podcast style set up with microphones and video equipment, and there wasn't a table with somebody to actually control this train wreck, it would have been like a schoolyard fight.
Yeah.
And it would have been stupid.
And what I didn't want is the paper to write something that there was no evidence happened. And I didn't want Teddy to say things about what happened that didn't happen.
Right.
Here's a record of it. Let's move on. The interesting thing that happened was I just wanted to be the arbiter. But if I was allowed to like ask questions, there was a lot I wanted to ask Chris.
I bet.
You know,
I'd have a lot of questions for both of them.
I don't. Well, the big thing to me was when like Chris really wanted to know if Teddy went in the Capitol. Like that was his big thing. And to my credit, when Teddy responded to the question and said no, he did not go in the Capitol, Chris Kelly's like, why? And I remember for some reason I had a stroke of genius.
That was the best line. He goes, wait, are you asking him why he didn't commit a crime?
And he's like, well, you know, and I'm like, no, like that's not cool. So, but it was nice. Look, and here's the thing. It's, I think from that, both of those guys have kind of reduced their rhetoric a bit. To a degree.
I wouldn't know, but that's the general outcome of two people having to confront each other in person.
And which is my thing. It's like, you guys stop yelling at each other through a keyboard. Like, go sit and have it out. Like, if you don't agree, you don't agree, but at least you can respect each other's position and move the fuck on.
Yeah.
You know what I mean?
Yep.
So, no, but that was a fun one. I'd love to get involved in that shit again. I was terrified. You might not be able to see it. I was terrified.
Oh, I could see it.
I was like,
we should have Chris on here.
Chris Kelly would never do it.
Yeah, he would.
I don't think he would.
Okay. I'm going to start a public campaign of shaming him.
I'm fine with
podcast. I'm going to do it Teddy Daniels style. You scared? Are you scared, Chris?
No, and I don't think he's...
Do you love America?
And here's the thing. Between those two gentlemen, right, there's probably 90% of the shit in the world they agree with.
Yeah.
You know,
that's how
it's
most people are.
Yeah, it's those few little things that they don't agree on that has become just a saber through the heart of whatever conversation is supposed to be. Yeah. Anyways, so Michael Cordaro, I wanted to talk to you because you're involved in finance and investments, and I don't know anything about that. And I'm a little concerned about what's going on in the world.
Lots going on.
Yeah. So can you just give us real quick like your background so that, you know, I did this for Sam Faddis, but I had the whole list and I knew all I'm like, you were in the CIA, you did this, you did that, you did this. And he's like, check. I don't know, because I don't know the financial world. Like what do you have to go through to get to where you are right now? And where are you right now?
So I was, let's see where to start on that one.
Anywhere you want, brother. You can start at the dinosaurs.
Well, so in college, I was a sophomore in college. I interned on Capitol Hill. And
is that a place I'm not familiar with?
This is, well,
is that in DC?
Not in its current state.
Were there as many walls around things back then?
No, they're fences. They're fences.
My bad.
So I was majoring in political science. I was minoring in finance accounting. I had thought growing up, you know, my dad was an attorney. That makes sense. I like to argue, I guess, you know, they wear suits. Maybe I'll be a lawyer. Never put a ton of thought into it. And then this was the time where I sort of had to think about it. And financial crisis happens.
So this is like 2008.
Yep. So this is 2008.
Which I didn't know anything about at that time either. I'm like, what's going on with this money stuff?
Yeah, right. Well, so we're in the cafeteria at the University of Rochester. A friend of mine comes up to me, and they used to have Wall Street journals like out on the table.
Right.
And he was like, do you know what's going on? And Lehman Brothers had just failed. And like he
so for those who don't know, what was Lehman Brothers?
So Lehman Brothers was a bank that had been around since before the Civil War.
I didn't know any of that.
Started as a partnership, which we can talk about that because it's something that I think is important to sort of what has happened and how finance has evolved.
Right.
Started as a partnership, eventually went public, which just means instead of the partners of the firm owning it wholly and being responsible for the decisions that the bank makes, it was now owned by the public. Partners get, they get paid by those investors.
Like publicly traded?
Stock. Yes.
Okay.
So it failed. There was at that time a credit crisis. So banks and institutions had stopped lending to each other. They did not trust what was on the books at Lehman. They couldn't price it. They didn't understand what was going on. Banks stopped lending to each other. That's what happens when people get scared, right?
Okay, for an idiot like me, banks actually lend each other money.
Yes.
Okay.
That's how a lot of businesses, not only banks but corporations, finance. They will do repo. They're short-term loans that they will do to each other for very cheap amounts. That's how, especially then, pre-financial crisis, a lot of this stuff operated. So when that stopped, a lot of things froze up and locked, and people and organizations who had bad, unhealthy things on their balance sheets, right? People stopped lending to them, and then very quickly it could be lights out if you're highly leveraged, right? So if you're relying on debt to operate and the debt stops flowing, you're dead, and it doesn't take that long. So they had been investing in very risky real estate products, among other things. I'm
an idiot. So when you say risky real estate, now to my understanding, it was one of them was home loans that in no way could people pay back.
Yeah, but let's stay here for a second.
Yeah, keep me on track.
Stay here for a second.
Okay.
So Lehman Brothers goes down, right? And now it's like we're going from a recession and a financial crisis to like, is money going to stop coming out of the ATMs because who's going to go down next? It made me so uncomfortable that I didn't understand how any of this worked, and I'm majoring in political science, sort of writing papers or whatever, and I had no idea how any of this worked. I said, something is off there.
Right.
Like, I need to dive in. And so
in other words, like, how did this happen?
How could it happen? How could this happen? And I don't even understand any of the terminology being used, number one. So I can't speak the language, and all this jargon's getting thrown out as if people should know it, and they don't. Right.
Okay.
And so I sort of dive in head first. After graduating at the University of Rochester, I went out and did a program at Cal Berkeley, took more finance and business courses. Eventually, I got hired by JP Morgan in the investment bank.
They took money too, right?
Berkeley. They didn't have, there was the only.
Well, they didn't want to take it.
Right, but they had to, right? Because the TARP money was being levied out to these banks. If somebody doesn't take it, it's like, well, we know why, right? And if so, then it's just, okay, well, they took it. They're struggling. We're going to short them, and then they go down next.
So wait a second. So like, if you
explain shorting.
Yeah. So shorting is, simply put, it's betting that a stock price is going to go down. Okay. So you borrow the stock from somebody who owns it, right? You go to a market maker. You say, I want to buy Lehman Brothers. You assume it's going to go down, right? So you go out, you put on this trade. If it goes down, the value of your trade goes up. You're able to pay them back because the stock that you borrowed off them has gone down substantially. You get the difference. Okay. But don't worry about the operational piece of it as much as just saying it's an instrument that allows you to bet that a stock is going down. Right. So you're betting that.
So you're hedging your bets on the failure, or that it just goes down.
You're not hedging. You're saying it will go down. Not necessarily fail, but it will be lower tomorrow than it is today. That's all a short is. And you do that through borrowing the stock from somebody who owns it. And then you get to, when you put it back to whoever you lent to, it's less, and you get to keep that difference.
Is there a timeline on shorting a stock?
So you pay on an ongoing basis.
Yeah.
So if it keeps going up, it becomes really expensive. It's called a short squeeze.
Okay.
And so, yes, you're paying for the right, essentially, to make that bet that it's going to go down. The longer it goes on and the larger it is, the more you're in on it.
Okay.
I don't understand how any of that works, that you can borrow money that goes down and then you make money on that.
I'm going to try and dumb it down because I know a little bit about this world, but not a lot. I actually had this conversation this morning with my son. We were talking about
after the birds and the bees. You talked about finance.
Yeah. Oh, okay. No, we were talking about finances, and I said to him, I was like, "Listen, I think just enough to be dangerous. Like I trade a little bit, but shorting is a game I haven't started to play yet.
Don't play it. There's no reason to.
Right, which is why I was like, I'm going to ask. I don't like it. Basically, what you're doing is, okay. For example, I own stock in Apple. Okay, you for some crazy, and I haven't. I'm sitting on it, waiting on it to go up. You, for some crazy reason, are like, I think it's going to go down. You come to me and be like, hey, I want to make a deal with you. If I'm wrong, you make money. If I'm right, and it's a gamble, it's just kind of a.
It is a gamble,
and you're just playing a game.
So sometimes it helps to put numbers on it, and this is not interesting necessarily to a podcast listener, but
that's not up to you to decide.
But let's say it's valued at 100.
Okay,
it goes to 70. Okay,
right.
You borrowed it at 100. You're paying them back at 70. I put 30 in my pocket. That's the sort of high level. That
seems like really high risk gambling with other people's money.
Well, that's why these hedge funds go under.
Yeah, and a lot. I mean, you're, it's.
Well, there's the other side of it too, though. That if the price goes up, then you can get really fucked.
Oh wait, can you come back to me?
Yeah.
Dan has his master's degree in forensic accounting.
I have a master's degree in accounting. I did work with forensic accounting, and a long time ago, I got my Series 7 and stuff. So I did it's like some day trading, and I dabbled in it, but the shop got shut down, and I never went back.
So just so you know, he has a basis of like way beyond what we do.
Sure.
So in 2008, Lehman, then you start working for JP Morgan.
Yeah. So I didn't graduate till 2010. But that really was when I was like, if you want,
did that change your whole direction?
It did.
Really?
And it was not like I was like, oh, I'm going to work on Wall Street.
Yeah.
But it certainly it prevented me from going to law school for a couple of reasons. One, I wanted to know and understand how that worked because I felt if I had that foundational skill set, I could apply it to other things later in life.
Okay.
Second, a lot of people at that time, and this is all coming to roost, currently, started saying, well, I'm going to go to grad school. This job market is terrible, and taking out loans and an immense amount of debt, essentially to say, I'm not going to go into the job market right now. It stinks. I'm going to go to grad school and let this all play
out. Yeah.
The debt thing scared me. It continues to scare me. And is another reason I do what I do today, because we don't understand how to use debt either to our advantage. We don't know how to protect ourselves from it. And at that time, for whatever reason, it clicked to me, like taking on $250,000, whatever law school costs, right? When I don't even know if I want to do it, seemed like it wasn't a good decision. No. And so I applied to, a lot of different firms. I was handing out my resume to anybody. I was getting coffee with people. JP Morgan put the offer across the table first, and that's how I ended up there.
Now, what was that experience like going into that?
Incredible. I didn't know what I didn't know. But it was crazy. I moved to New York, actually moved in with a couple guys from Scranton, who I didn't know very well, but they needed a roommate. So that was very helpful and sort of, helped keep my head on my shoulders a little bit. But my first job was on the commodities team, where I was in the operations group that was helping with the trading, of oil and natural gas. So the energy team. And, that has since been sort of disallowed, where investment banks aren't trading in commodities quite the same way as they were at that time. But that was my first job. So, you had to learn how to operate a spreadsheet. You needed to learn how to get yelled at. You needed to deal with long hours. There was a lot that came with it, maybe that wasn't in the official job description, that I learned and took from it. And I was at JP Morgan for over 4 years, where I had a couple different roles, but that was my first one.
What's the environment there? Is it like Gordon Gekko, or is it like?
No, it's, especially the types of, there are sort of the Wall Street pricks for sure.
Yeah.
There's a lot of good people too. It was a lot of fun. I was in my 20s, I had a couple bucks in my pocket, the hangover didn't hurt me very much then. So we would be, we were able to go out and wake up and it was fine, and that's what it was. I didn't save as much as I should have. But I was I was 23 working. I had a good job with a good firm and I learned a ton every day. So I loved it. Now, I also knew that I didn't want to do that, when I was 45. But it was, for me and what I needed to learn, it was the best place I could have started in a lot of ways.
Is that kind of like trial by fire, like get your feet wet?
It is. Yeah, they do. So you do a training program as an analyst. I was in the investment bank analyst program. They do some training, but you can't really replicate the speed and the stress and the sort of how it goes. Now, it's not like it's not like television or the movies where the phones are ringing and people are yelling. Wall Street right?
Shit.
You were on the trading floor.
Yes, at times. So my first role was in actually an office downtown, and the trading floors are in Midtown. But I was supporting the traders.
Okay.
So, but it is not like that because like we're clicking buttons. You're on the phone, you're talking to clients, you're talking to counterparties, all that. But it's not like buzzers going off and all that. Right, it's a lot more civil than that, but it's no less intense. I would say that.
Well, because it's probably changed over the years. Because, I mean, if you go back 20, 25 years ago, it was phones and paper.
Right.
And you're running papers, literally.
Exactly.
Now you're at a computer on the phone just doing your thing.
Yeah. And even sometimes the computer, the order can come in through the trading platform and get filled by
automatically.
Yeah, I was watching.
It depends on the product. It depends what you're doing.
I was watching a documentary about communication, and there was something about like I don't know if you know this, but most of the internet is run by cables that are rolled across oceans.
The ocean, yeah.
Yeah, so they're trying to do this new cable, and what it does is it increases, it shortens the speed by which trades are made by like a few milliseconds, and just by a few milliseconds, it means the world to how much more trades can happen and how much more things can happen in a faster time. Which I never thought about, like. If you're going from 8 milliseconds to 4 milliseconds, so like we can do twice as much.
There's a whole industry built on what's called high frequency trading, and that's what it's predicated upon, is who's got the fastest computers, and it's an arms race. So
like literally, like it's an arms race.
Yeah. And so there's a book out there called Flash Boys by Michael Lewis. So Michael Lewis wrote Liar's Poker, which was kind of like in the 80s. He unveiled a lot of what was going on Wall Street. He wrote The Big Short, Blind Side. He's a great writer. But anyway, this book, Flash Boys, sort of took the veil off high frequency trading, and a team of sort of mavericks who were kind of Wall Street guys who started their own company called IEX to sort of even the playing field, so to speak. And those guys I actually met and interviewed with, ended up moving to Philadelphia because my wife despised New York. But, maybe in a parallel life, that would have been somewhere I ended up.
Oh, she hated New York?
Despised it. She's from Dunmore originally.
Yeah.
We knew each other.
You got her to move there?
Yeah. And she was in grad school in Philly, visited all the time. We were really excited about it. She went. It didn't take long for her to realize it wasn't her cup of tea. And so at that point we were still just dating, and that was how I moved to Philadelphia and went to another firm called Brown Brothers Harriman.
I mean, was she literally like, this is terrible here?
Yeah.
What didn't she like?
Speed,
like the hustle and the bustle?
Her job stunk too. Like, she's a guidance counselor by trade. She took
the New York City school system.
No, she worked in the Philly school district, but there she was a nanny while she was looking. So she was working for, a woman on Park Avenue, there all day and night. She was getting paid well, but that wasn't how she pictured her New York experience. Yeah.
I always say New York is one of those places that's great to go to, but after 2 nights, 3 days, it's great to go home.
Yeah. It was like LA.
I would agree with that today, going back.
Yeah.
It's
living there, establishing a home there as a single 24-year-old guy. That sounds fun.
Yeah. It's the best place you could spend, your early to mid 20s, but there's a shelf life.
Oh yeah. Yeah. Well, there's got to be a high burnout rate too. I mean, you can't go that hard that long.
Yeah.
So you go to Philly, right? And then what brings you back here? So I'm assuming you went to Philly in what, 2013, 14?
So that was 2015.
2015.
So I moved from sort of that investment banking trading world, and then I worked in interest rates and derivatives. So that's
I have no idea what that is.
So it's the trading of currencies. And so let's say, Pepsi they have operations all over the world. They do not want, if the Japanese yen becomes, less valuable against the US dollar than it is today, and they sell a lot of Pepsi over there, they better protect that, right? Because that's actually going to hurt their revenue. And so companies are always trading in different currencies if they want to do business in that particular country. If they want to make sure sort of whatever their investment their revenue is protected, they're always putting on trades to help
to influence the market.
They're trying to hedge currency risk.
Yeah.
So let's say I'm, a company and I sell in the United Kingdom and I sell in the United States, right? But I'm based here. Well, then I want to make sure that if I'm making all my money in the United Kingdom and the pound is taking a dump, that my revenue I'm not losing that actual purchasing power when I transfer it over to dollars. It sounds more.
Does that make sense to you?
Yeah.
Just think of it, a dollar versus a British pound versus a euro versus the Japanese yen. Those are all just assets in their own way, and they all have values against one another. And so I have different uses for all of those depending on what my needs are, and somebody's got to trade them, and that's what JP Morgan did.
Are you familiar with like exchange rates?
I'm familiar with all that. I just don't understand. Like, so when I'm having it in my head, when I'm trying to wrap my head around is like, it seems like they have just people on staff who deal with that, or they hire companies to deal with that.
It's no different than having a lawyer on staff, than having an HR director on staff.
I guess
you need somebody who can handle certain aspects of the company. And if you're doing international trade, it hurts. If you come down to my business and you're purchasing something, okay,
and I only have rubles,
and you only have rubles, if right now pretty much every business in the country and in the world is raising their prices because of inflation, you have to. Everything is reactionary. But if you have some control over the ecosystem in which I do business, I don't have to change my prices. That's kind of what those companies are doing. They're influencing the exchange rate, the value of international currency, so that when they send their product over there, instead of selling an Arizona iced tea for 99 cents, they don't have to sell it for 89 cents and lose 10 cents.
I think where I'm getting caught up or hung up is the control. Like, how do they
control it, but you can influence it by trading.
But JP Morgan's job as the investment bank in that scenario is to be the market maker. So they're saying, well, you want to buy 100 million yen.
Yeah.
Well, we better find people who want to sell that, right? So a market maker's job is just buying and selling on behalf of others. It's connecting buyers and sellers just like any other marketplace. So that's what a foreign exchange
I just get confused
doing.
on the currency. Like, who's buying? So somebody's okay.
There's always.
I feel like an idiot, but
you're overthinking it. Just
okay. Maybe
if you
turn it into an iPhone for me.
if you want to buy iPhones, somebody needs to be selling it in the marketplace. Same thing with dollars.
Isn't that like mafia stuff though? It's like laundering money. It's like, oh,
no. No. Correct me if I'm wrong. Maybe this will help him wrap his head around it. And I could be wrong. I don't know. In the market, I was just telling Dan earlier some of my very wise investments I've made over the past couple of weeks and months.
Were they?
I'm pretty impressed, and I think I'm going to follow Micah's lead.
I'll tell you what I did here in a minute. So the value of a stock goes up and down depending on the market. And correct me where I'm wrong. I'm trying to explain to him the way I can wrap my head around it. If the value of a stock is currently $100, but for my business interests, like to use like a Pepsi or Coca-Cola example, it's better for that stock to go down in value because it helps me. What I would do is I would essentially go to buy it from the marketplace at $99, and that then brings the value of that stock down. Is it basically what people are willing to buy it for? That's what influences the movement of that stock value.
Yeah.
I mean, that's really dumbing it down.
Just think of it like any other marketplace, right? There is an entity who is bringing together buyers and sellers. Mm-hmm. And it is, like,
so an entity is like a middle person.
Yeah,
like
it's a market maker. So you go to the New York Stock Exchange if you want to buy that stock. Well, you're paying a little fee to the New York Stock Exchange because they're finding you a seller, so you can then own it, right? It's the same thing.
So basically, if you make videos for a living, you do a lot of other stuff, but you make videos for a living. Let's say like the value of a video that you might make is $10,000, okay? And a company comes to you and says, I want you to make me this video. You say it's $10,000. They say, it's not in our budget. I'm only willing to pay you $9,000. Your video services are now worth $9,000.
Yeah, they're just priced every second of every day in the financial markets.
I mean, it moves so unbelievably quickly.
How did we survive before this?
This was always going on.
If you understand,
not to the degree, not to the
100%.
amount.
Yes,
100%.
Yes. I mean, if you go back like 400 years, not to the degree.
No,
but I mean,
but before computers, how are we doing like all these transactions,
dude? Before
on paper, why do you think there were so many financial panics?
Yeah.
So
like those ticker tapes, that's what that shit is. It's just all that stuff coming through all the time. That's what that is.
It's just that those aren't anymore now.
Now the stock market closes, right? Foreign exchange markets don't, because
they're on different time zones.
Yeah, because in the world everyone's trading at some point. But there's a book about Brown Brothers Harriman, which we haven't gotten to yet. The company I worked for, it's called Inside Money. It just came out in the last 3 months, and it takes you from the founding of the United States to today, and how the financial system evolved and how that actually helped the country evolve the way it did.
So we're gonna put this on the screen right now.
Could you ticker tapes?
Yeah.
It goes everywhere from the railroad booms and busts, the Great Depression, sort of how it all worked. And I think, everyone today is so negative, and how like something's not up to snuff, and everything. And a lot of times they're right. But if you look at history, I don't know.
It's
context
like
is important.
Same book, different cover.
Context is important, and when they were doing it on pen and paper, there was a lot more room for error.
I mean, I think I didn't realize it until probably, I don't know, maybe over the past 10 years, because the financial world was just never it just wasn't part of my world.
Yeah.
And I always thought it was fairly simple. It was, I have $1, you have a product, let's trade. It's still that simple in many ways, but it's so, once you get into like printing money, like especially what we've seen over the past years, printing money, the Fed, like it is so unbelievably convoluted, but at the end of the day, it's still actually so simple.
It is. And part of what I'm doing, part of why I came to Alliance is we're not taught this. Simple is not easy, right? But being sort of in a good place financially, like you just have to have a few principles in place. You need to have a framework that you operate under at all times as the environment and the business cycle changes. But it's not complicated. Who makes it complicated is one, financial media that I think is generally
like Fox Business or shit like that.
Yeah, I think they sort of lose the.
I'm not saying Fox Business specifically, but that world.
Yeah, they lose the forest through the trees, or vice versa. But yeah, they're just doing anything else, right? They're getting you to click. They're getting you to stay engaged. It's a product. It's not news, just like anything else. But then also, we're not taught it in our lives as children. We're not taught it as teenagers. We're not taught it as adults, and we're making major financial decisions with we don't understand the language. We don't know anything. And then what happens? Somebody fills the void. So somebody in the financial industry says, I'm really important because I can speak to you, you dummy. Let me just take care of this.
Yeah.
And then you don't understand how they're getting paid. You don't understand why they're putting you in what they're doing. And they say, we'll talk to you again in a year.
Well, if it's so important, why do you think that we don't have the tools to understand all that? Because it has to come from...
Well, I think education traditionally, and that was one of the things I talked about in my conversation here with Jill Murray.
Oh, by the way, he's on the board
at Lackawanna.
Yeah.
So Jill was here, and Erica Barone Preachy was here.
Yeah. But
I asked them that question point blank because it's something like, I want to Alliance to have a center for investor education where we can teach this stuff. Mm-hmm. It's not, we're not product based. We sort of sell you a process. And so I'll tell you everything I'm going to do in the first meeting before you ever become a client, because I'm not getting paid by selling products. But in our industry, just like in anything in life, you need to understand incentives to understand why it works that way. So why does it work that way? Well, what's the incentive structure of most people who sell financial products? They get commissions based on something they give you.
Right.
They use fancy jargon because that makes them seem more valuable than they probably are. Or maybe they at least want you to think that, right?
Yeah.
And then the education system, well, we don't have enough time, but why is any curriculum sort of inefficient? There's hundreds of reasons, and I'm not an expert in that, but education on the whole hasn't been set to help people make decisions so much as it's to like follow a rubric, right? And so decision making and behavior patterns are really what determine financial outcomes. Not IQ, not knowledge, not how you take a test. And that's really the biggest misconception.
I've met people who I'm surprised they know how to wipe their ass, and they're really smart with their money and investments and stuff like that.
Absolutely.
Like I look at them and I go,
well,
how the hell did you figure this out?
Because they have a process, and how we think about money, that's all psychology. So that's based on how you grew up, what were your traumatic experiences coming up, like, how did your parents think about money or whoever raised you, and that's sort of what leads you to make a decision. If at no point you come up with a process on your own, and that's usually how it goes. So when people are like, I've been investing since the 80s and I lost money in the stock market. Why? How is it? It's not possible.
Yeah.
It's not possible unless you made poor emotional based decisions or you didn't have a framework for making them. And so if you look at the stock market, the longer you zoom out, the more it's going up and to the right. But, in the interim, it gets really messy and it gets really crazy, just like it is now. And then, if you don't have that process in place, that framework, you're going to make mistakes.
Can I tell you my process and you tell me if it's a good idea or a bad idea?
Oh, this ought to be good.
Probably.
Wait. So hold on. Okay, so hold on. Okay, so hold on. So there are certain things that he can't say.
That's fine.
And don't be afraid to say them. Don't be afraid to say I can't talk about that.
Well, and if there's something I say I shouldn't, then we'll figure that out.
We can beep it.
So no, I don't think that we're going to go there. So here's my process. So I have an E-Trade account. Okay, I don't really do. I mean, I have like your Roth IRA and all of your typical, few things like that.
Yeah.
But I like to play with my E-Trade account. It's almost like my adult video game. And
Leisure Suit Larry.
Yeah.
I just play Tetris.
So literally, I was telling Dan this earlier. I don't have a ton of money in it, but it's kind of fun. I just look at what's going on around the world. I don't short things. I just buy and sell based on, are they going to go up? That's the extent of my knowledge when it comes to stocks. So I just watch what's happening around the world and I buy and sell based on that. As soon as I heard rumor that Elon Musk was going to buy Twitter that morning at 9:30, I bought a ton of Twitter. I sold it 3 days later and I made I think a 12% profit because I figured the deal was going to go south.
Yeah.
That was my guess. When Russia invaded the Ukraine, what did I do? I sold about 50% of my stock and some things that I didn't love, went heavy on Halliburton.
See, but that seems crazy. But there are, I follow people on, I hate to say that I'm even on Twitter, but I follow people on Twitter who look at what Nancy Pelosi does. And then that's how they make
their
big
thing. Yeah.
Let me show you one. I just went on my E-Trade account and screenshot it. There was a penny stock. I don't even know the name of this company to this day, but I did a little research. It is some global European something. And basically what this company does, they're a transport company. And a couple of days into the Russia-Ukraine situation, a light bulb came on in my head. It's a war zone. Ukraine doesn't have the infrastructure like the United States military has the infrastructure. They're going to have to get supplies from all over the world, from wherever they are to the front lines. And that's what this company does. So I bought hundreds of shares of this penny stock. Marky, look at where it went from when I bought it to where it is now.
That's a lot of pennies.
Yeah.
So wait, show him this. Is this good? Is this okay? That's
a nice looking chart.
I bought down here. Yeah.
That's a nice chart.
I mean, that's over the course of 6 weeks, 7 weeks.
So two things I'd say.
And I'll sell it here in probably 2 or 3 weeks.
So one, there's the first thing you said is really important, right? That jumped out at me, which is it's like a video game.
Yeah.
So
which is probably a bad way to handle it.
Not if that's, but that is the purpose of that account to you.
Yes.
Correct. Have at it. Now, if you're doing that with money that should be going to other places in your life,
correct,
then you have a problem, right? Because it's
not an addiction.
It's not a repeatable process,
right?
And what happens eventually, the one wrong move, the one strikeout, it's going to wipe out all of the good moves you made. And so I focus on having a repeatable process of singles and doubles, getting on base and avoiding those big misses, and then
consistent small wins.
Exactly, it's incremental, but I have plenty of clients who have what I call the mad money account.
Yeah.
Because when there's a misalignment, which is they expect me to be doing that, or I tell them not to do that, which they enjoy, then how am I serving them as an advisor?
Yeah.
So what I always focus on is capital allocation. So you have X money coming in. Where is it going? Is that to its highest and best use? Once we cover these, 3 or 4 buckets that you have at it.
Yeah.
Right? Because we've covered everything we need to cover. So that's a very different approach than how I think what people think I do, which is I got this tip on Halliburton, right? So the second piece is
Dick Cheney's coming back.
The second piece is
shoot your face off.
With everything you just explained. So you made 12% on Twitter in a few days. Well, you're going to pay you're going to pay over 25% in capital gains on all of that. So the tax burden you're incurring on a regular basis,
plus the fees,
plus the trading fees,
so I
and
probably
all that,
only made like 2%.
right? So what's your net, and then the amount you put in for that? You're a successful guy outside of that,
right?
What's the better ROI for you? Is it to be in front of the E-Trade account or the other stuff? However, like you said, this is your hobby. This is your
right. Well, so I have a financial guy, and he and I have had that ongoing conversation now for years. Lavish is obviously our baby. The way I would always communicate it to him is it's a retail store. If I buy this widget for $10, the typical market markup in a retail store is 100%. So I sell it for $20.
Okay.
In 2 weeks, I can double my money. So why would I invest it in something that I'm going to get 7% growth on over the next 18 months? It's like, where is my money best used?
Correct.
And then over the course of having that conversation, we then hit a point where it's like, okay, but if you want to grow the business, it's good to have assets over here, so that asset can work for you in this way. You can use the bank, and like you said, like making that debt work for you.
Yeah, and it's diversification too, right? Mm-hmm. So everything moves in cycles. So I want different cycles. If 100% of my assets are in a retail store, at some point retail sales will go down. Right. And so it's just, do I want all my eggs in that basket? Again, It's not that complicated, right? It's just, but when you say you need to diversify your assets and make sure that your portfolio has multiple streams of income, like I can out jargon anybody, but all we're saying is don't put all your eggs in one basket.
Right. Right.
So do you like talking about this?
Love it.
Do you really?
Yeah.
I don't understand it. So we're going to move on to conspiracies. So here's kind of like what I'm interested in. So like I'm interested in all of this.
That could be the name of the show.
No. So like here's what I'm interested in.
Here's kind of what I'm interested in.
Yeah, I heard what you said. Here's what I want to talk about.
Back to me now.
Thanks for coming in, Mike. I know something I need to say.
I know. Before you move on from this, I am dead serious when I ask this. I like I said, I had this conversation with my son earlier. He's a senior in high school, graduating soon. Math whiz, looking at probably going into accounting, something along those lines.
Yeah.
And I was trying to explain to him stocks and certain things that I have a weekend warrior knowledge of. I can wrap my head around it. I can have a conversation with somebody like yourself and not get terribly lost in the weeds. Do you ever do like I'm going to do like a 2-hour like Q&A with a group of people and it's kind of like my intro to finance?
Yeah. So I taught a class at Lackawanna this semester that was essentially, it was personal. It was 210, but essentially it was just 101. What do I need to know to be out in the world as an adult and make decent decisions repeatedly? And that is,
can I take it?
Yeah. And that is what we're focused on. I want to sort of go to high schools. I've spoke at Chamber of Commerce before, different things where the goal is not like, do you really need to know how a short works? Or like, do you just have to have that general framework of like, what am I basing my decisions off of and why? And again, if you just make a lot of good decisions that are small in 10 or 20 years, that's going to compound, right? Good decisions compound and knowledge compounds just like anything else.
I also think one of the things that there's a problem with is that, I don't know how old you are. I'll be 42. People need to have some sort of like quick joy. You know what I mean? So we live in this world where it's like everything that we want is at the push of a button.
It's
you get it
instant
immediately. And I think it's really hard for people to plan for tomorrow. I don't see a lot of people making, me especially, 10 years from now, I don't know what I'm doing tomorrow.
Well, and it's especially difficult when you don't have a lot of excess.
Yeah.
If you're living paycheck to paycheck and, at the end of the year, the calendar year, you do your taxes, maybe you get a return and you've got $500. Are you really going to take that and put it in an IRA?
Right. No, you're going to get an Xbox.
Well, that's why the process is so important. Is it has to be operating the lights in the room or whatever, all this equipment, right? Like we don't hear it, we don't really know it's there, we don't feel it, but it's going to work when we listen to this later. So like your planning should be sort of operating in an automated way.
Yeah.
Because if you get that $6,000 check, right, or you get that big bonus, like, no, we're humans, right? We're designed to live for tomorrow. We are not going to operate against human nature consistently because that's insane. So instead, you need to build around behavior of human nature and just let it happen in the background versus like, God, that's going to suck. I'm going to make all this money and then, I'm going to cut the check to my IRA and not touch it for 30 years. Like that sounds terrible.
Yeah.
However, I will say this, in a lot of ways, what I'm doing is I am engaging somebody not to get 10% year over year. I'm not, not to get this or whatever, but your head's going to hit the pillow easier knowing you're doing what you need to do for yourself and your family in the future state, whatever that looks like. And so if your head hits the pillow easier, then you are satisfying the need today. And that's something that people get sort of inherently. Like you kind of know when you're, like a lot of people say, I know I need to do something. I just don't know what.
Yeah.
That's because there's, that sort of sticks out.
And I heard a thought process maybe 10, 15 years ago, and it was kind of like at different stages of life, depending on your, cost of living, your income, your, debt to income ratio, all that fun stuff. In your 20s, you should be investing or using your money in one way versus your, 40s versus your 60s.
Yep.
And what I always kind of heard was, when you're younger, obviously you can take more risk. So correct me if I'm wrong, but like an IRA is going to be more low risk, or more mid to low. Like a whole life policy is going to be probably super low risk. And then, obviously what I'm doing on E-Trade, watching Halliburton and Twitter and, weird European penny stocks.
Yeah. Watching Stark Industries.
That's obviously from what I've learned over the past year is very high risk. Because at one point I was up about 50% overall with my entire portfolio. And then for a while, about 3 or 4 months there, I was about 3 or 4 months ago, I was about 35 to 40% below my initial investment.
Yeah.
I'm back up to about 10% over. Thank you, Halliburton.
Yeah. So it's very, again, like, what are you trying to do with different, I use the term buckets.
Yeah.
So I should have a bucket.
I can understand buckets.
I understand
buckets.
So think of it in terms of lines of defense, right? If you're right here. So the first bucket, that should just be cash. It should be liquid, right? If the boiler breaks, if I need the new roof, if somebody gets sick, I can't work, whatever. Like you should have that cash, right? So that's just preservation. Second bucket depends on everybody's situation, but it should be a mix of preservation and growth, right? You don't want it all in growth because you may need it. And then the third bucket, that should be just absolute growth oriented the younger you are, because to your point, you have time before you need it. But that game of preservation versus growth is really what it comes down to. And then my job is to determine sort of the investments that fit the goal that you have assigned it, right? And so the problem people get into is they invest money they may need in a year for like a down payment on a house or whatever it is, right? They invest that in the stock market. Well, you better have a 5 to 10 year time horizon if you're going to invest in stocks.
Yeah.
If you don't, then you've misaligned your time horizon with your risk profile. So all that you're doing is you're saying, if this is the time in which I may need it, here's how much risk I want to take. The less amount of time, the less risk you should take. And the more time you have, the more risk you should take. And it's not that much more complicated than that.
Okay. I'm going to ask you about buckets. This is a segue, Dan. What are you doing over there?
I'm taking notes, but I don't know. Just you and I don't know.
Mostly doodling.
Yeah.
So I do accounting, quote unquote, for Mark here. And watching you talk.
Doesn't he have to have income to do accounting?
Man, is it just shit on me day? Is there a fucking stork over my head just shitting on me?
I know your struggles with this whole world of finance and stuff like that. And that's why I can see where it's like, oh, let's go back to like buckets. Explain asset.
But that's interesting, right? So you
can ask me questions,
but you're a deep thinker, right? You like to get into the weeds.
Yeah.
What I have seen in our conversation here, but also in prior conversations, is very quickly on topics of finance, you check out. You're not interested
because you're speaking Latin to me.
Exactly, but that is a pattern of behavior for whatever reason that you have sort of adopted, because it's annoying. You don't understand it. It's confusing. You don't want to feel that, and so you just say, you know what, I'm done.
It's like looking at a baby whose nose is running and the parents won't wipe it. Like that to me, like that's
never heard that one before.
Well, I have crazy things that I say. But because I don't understand, I feel stupid.
Yeah, and
because I feel stupid,
I don't want to feel that way anymore, so I stop. And I think
I've tried to not feel stupid, and I feel stupider by not trying to feel stupid.
And I think that a lot of people, they get themselves into situations where they feel intimidated talking about money, right? If you look at prior generations, they never talked about their money. Like that was crazy.
Yeah,
right?
No money, no religion,
right?
No
Especially
politics.
like that. Yeah, like that Depression era baby, right? Like they came up, they did not talk about money, and you saved it, right?
Yeah.
And so, and then as things get more complex, right? So you have all of a sudden, like when in the 70s, there wasn't $250,000 law school, right? But the education we have around money hasn't changed, even as the complexity has ballooned. And so people feel intimidated, and then they say, I'm not doing that. And then it's like kind of like, the ostrich puts their head in the sand because they've never been given the tools to just understand. You don't need to know how to short a stock, but understanding, generally what a stock or a bond is, like that's a good thing to have.
So maybe here's an easier way to explain this. You listen to Ty, right? Ty Holmes, when we had Ty Holmes on. Yeah. So we talked about literacy, right? My mother was a teacher in West Scranton, and I was talking the other night about literacy, and I said, how many kids do you think in the school district are under the guise of illiterate?
Right.
And she said at least 45%.
Oh my God.
Yeah. I look at this as a financial illiteracy.
100%. It's exactly right.
Yeah.
It's exactly right.
But I still haven't, I'm really good. Like once I get it, like once I can see it in action or know what it, like the mechanism of it.
Yes.
Like, there's got to be something that has to be relatable to me for me to understand. It's like when you take the federal budget and break it down to a household income, right? You're like, oh, this doesn't make any sense to be doing this, right? So if there's a way for me to understand it, I can get into it. I haven't found my way into this yet.
Yeah, no, I think a lot of people haven't. One of the things that I try to get better at all the time is like, for what's going to click for you is going to be different for you, right?
Exactly.
But my skill set needs to be to get the same information across, even though that language may be different, and that's really hard. But it's really interesting.
But you got to get to know the person.
You do, and like if you're meeting with me, sort of like professionally, I'm probably talking. If I'm doing a good job, I'm talking 10% of the time, because I need to understand how you think before I do anything. Yeah, I think that my industry does a really bad job of that too, and that leads to
communication.
Bad outcomes. Yeah. So if you have a bad outcome because somebody just sticks you in a fund that gave them a commission or whatever it was, right, and then that goes down, well, they're all bad. I'm done. I'm not doing that again. Just because you just got burnt.
One dog bit you, so now all dogs are bad.
Right. It's that's just human. That is a very rational thing to do, right? Say, I'm not going to do that again because I'm not going to touch the stove. I just got burned.
All right. One night do you smoke cigars?
Yeah.
All right. One night I'm going to get you a cigar and you're going to try to, we're going to try to push this boulder up the hill about trying to understand.
Think about it this way though, like go back.
He doesn't realize that after 42 years, like he's still trying and I still don't get it. Like
I understand.
You know what else I don't understand? Poker. I can't play poker. I don't understand finance, and I can't play poker.
You can. The problem is you don't have enough interest in putting the time into learning it.
There's a difference there.
Well, you have to want to. Well, go back 2 years ago when you started having your like worldview awakening, when the whole world got shut down and all this craziness. And
people think I've lost my mind over the last 2 years. They think I have lost my mind.
And you might have. But go back.
A lot of people have.
Yeah. But like go back to what your worldview was and what you thought was reality. Okay. You think you know reality about money and how it works and how it moves around.
I still don't think I knew.
But like you thought you had a worldview of like, this is how things work in America. This is how things work in the world.
Sure.
And now you are. But you had to pique your interest and then put in the effort to figure it out. It's no different.
Well, so the weird thing about that is like I started getting interested in like science and COVID and stuff because I was like, I don't want to die. I want to figure out like what's my risk mitigation.
Do you want to die financially?
I was getting to that. And what pisses me off is that like I can't kind of look at it in the same way when it comes to finance, like how like investments, assets, like Dan will tell, like he'll start talking to me about stuff and my face just goes, yeah. Like I just don't get it. Like because I always think it's like money in, money out. That's it. And it's way more than that.
I think in like 5 slides,
you can
I'd have
help
you
me
sing in a different tone.
All right. Well then I'm 1,000% willing to do it.
I'll bring my best sort of 5 because a lot of people are visual
best
learners.
5 slides.
They're visual learners, and I'll say, here's what you need to know as a general
I'll give you a quick for instance.
Be it because you are a visual learner.
Totally.
You talk about an ethereal concept, and you're gone.
Yeah.
Well, and then you get into
see it,
and then I think people get intimidated by math too. Even though more of my business is psychology, in my opinion, than
Isn't that crazy?
It's people skills,
but it's known as a sort of numbers thing, right? Like. Or a lot of people are like, hey, can you do my taxes? Right? Like that's all number stuff. And I'm like, no, I'm not an accountant. I don't know anything. Like I know as much as you do about that, right?
I am an accountant. I don't want to do your taxes.
Okay. So here, I'm not going to understand any of this, right? But back to the buckets, right? Are we looking at, without you giving a forecast or an assessment, are we looking at the possibility of those buckets being changed relatively soon? In other words, like those buckets and what you put into them and how you treated them, are they going to get changed for a lot of people as far as like investments? Or because I don't know anything about 2008, but I see like there's parallels because the things that they said that were going to bust from 2008, whatever those numbers were on the graph, the numbers are higher now on the graph. Like
what
the
are we
housing,
talking
like
about?
let's just say housing. Let's just say gas prices, food prices. Like people, I don't think a lot of people understand how the economy works.
Agreed. So let's start there. Let's start with just inflation. Prices going up because that matters to everybody.
Okay, so for the idiots who don't know, what is inflation?
So inflation is the loss of purchasing power over a period of time. So when you hear your grandparents or your aunts and uncles say, well, when I was, going to the store and it was 40 cents for milk and I bought my house for $3,000. It's like, okay, well, let's remove inflation. It's about the same.
Okay.
So it is as more money enters the system, you have the reduction of what that dollar.
But where does the money
worth.
come from?
The Federal
the more
Reserve.
money getting into the system.
Yeah.
So that Federal Reserve money. So
the Federal Reserve regulates and controls the flow of U.S. dollars.
So
into the system.
thousands of years ago or 1,000 years ago, if I had X amount of silver, I could get a goat. Or if I had spices of certain kinds, I could get a goat.
If I was willing to give you the goat for that.
Correct.
Right? We were just negotiating.
But everything's backed up with something, right?
Why?
I don't know because I don't know how.
Why
you can
is silver worth a goat?
I don't know. I'm just saying.
But that's the thing. A goat is tangibly worth something. You can eat it. You can.
But so is silver, right?
If you melt it, if I have a use for it. If I don't, then I don't care.
If somebody wants something shiny.
Yeah, I think.
Okay, in today's world, It used to be backed against gold.
Not for a long time. But
okay,
yeah.
but that was the thing. It was like if they ever call in our debts, we have this gold. Correct?
Yes.
Okay. Why isn't that the way it is now? And what do we have in case anybody calls in our debts?
Well, so the first question is, so Nixon, I believe it was 71, he severed the tie to gold for the last time. Now that had happened many times before in the past in different forms, right? FDR did it in his own way too. But they severed it because there wasn't enough gold backing the amount of debt that had been created. And so
doesn't that mean like stop buying shit?
Yeah, but it also means, so like think about it, if the amount of money in the system was finite, that just leads to different problems.
So in other words, if we started the system with $100,
well, where's it going to go? It's going to accrue to the high people.
It's just going to go back to $100.
But it's going to accrue to the people at the top, and there's not going to be enough money for commerce, right?
Okay.
So there's more people, and there's more production of goods. The economy grows. You need more money to transact.
Okay.
At the same scale. So that's why it doesn't necessarily always grow. 2% a year is what they target for inflation. Now, fast forward to understand what's happening now. You need to go back to March of 2020. March 2020 happens. The market essentially had a seizure, right? Where they didn't know what was wrong with the patient. So the Fed pulled out the playbook from 2008, which was to say,
wasn't that a bad playbook from 2008 or was that a good playbook?
It worked at the time. The problem was,
isn't this a different situation? I'm not questioning you. I'm questioning.
No, I know.
I'm
trying to think of how to answer it. It worked. They saved the global economy in 2008 and 2009. They saved it. They never backed off. Sort of, it's like you give the kid candy to stop crying, right?
Right.
They never took the candy bowl back away.
Just kept feeding
until they tried to then in 2018, and the market freaked out, right? Because what happens when a kid gets used to eating candy for 9 years, right? They're gonna be like, "What are you talking about? You're gonna take it away now?" Yeah, they're because they got all sorts of problems in the temper. So then they tried to raise rates in 2018 to like sort of like normalize is the term that you would hear an economist use. So in 2020, you have record low.
But 2018 they weren't able to do that.
They sort of stopped. It was like rates were going up, but they were still incredibly low historically.
Okay.
2020, there were signs the economy was slowing down. There was all sorts of things going on, but COVID happens and the markets go into just a complete shock, right? So they said they took what they did in the financial crisis. They took that playbook and then they put it on steroids and they injected it into the system. That's what
they turned it into Bane from Batman.
So you had the S&P 500 went down by 33% in March when everybody's saying like, what's going on? It was back to its pre-COVID level in June, right? Now, part of that is you have markets are forward-looking, right? Economic data is backward-looking. So that's part of it. The other part of it is, though, they printed in the last 2 years, out of the amount of dollars that are in circulation, 40% of it has been printed in the last 2 years. So
isn't that bad?
It's not good. It's not good. And so what happened,
all it does is it just devalues the dollar. Which means in order to normalize, you have to raise the cost of everything else.
Said inversely, it raises asset prices.
Right.
So the cost of everything goes up because you have more dollars chasing the same amount of goods.
Right.
Now, simultaneous to printing 40% more in dollars, you shut down an economy and said, we can no longer produce X, Y, and Z, but A, B, and C are okay. So you had a supply shock that prevented fewer goods. So here's the example that I heard put best by an economist that I like to read about. You have 10 apples, okay, in January 2020. They are worth $1 each, okay?
It's $10.
$10.
Yeah.
So that's the economic system, right? And that's what's going on. So then you have the economy shut down to prevent, the spread of the disease. So now you have 5 apples, okay? However, now we have $1. Now we have $14 into the system instead of 10. So you cut the supply down to 5, and you've raised it to $1.40 an apple. So now it's actually $2.80 an apple. Does that make sense?
No,
So-
you said 10 apples and then you have 5. I wonder what happened to the other 5 apples.
Because we can't produce them anymore.
Oh, I thought they were already produced.
Well,
Okay.
that's the economy. That was the amount
Okay.
of goods and the amount of money. Now we cut the amount of goods being produced and we raise the amount of money. That's inflation.
But how can? But I don't understand how that. See what I think. See, here's what I think it is, right? And this is just me, like, anecdotally saying this. Is I think when stuff like that happens, people don't understand why it happens.
Yeah,
and immediately they go like, "Fuck the government."
Mm-hmm.
Do you know what I mean?
Well, for instance, right now there's a lot of people blaming, Joe Biden for inflation.
Who's that guy?
What they have done, can argue isn't
Joe Spruce Street, right?
Joe Spruce.
I think that's his middle. I think that's his middle name. But a lot of
Me and
people,
Corn Popper down there on me and Joe Biden, Joe Spruce Street.
a lot of people are blaming what they have done for inflation. Now you can argue that certainly hasn't been helpful, but if you print 40% more money than existed at any point in time in the country's history, you do that in less than 2 years, and you shut down the amount of factories and goods that can be produced, that's real inflation. What they're doing is a rounding error at best. And so that's where people don't understand the problem.
Who's they with the rounding error?
The federal government. What they did in terms of how they're spending is not helpful because you're spending more in inflation. You're putting more money into the system, but that's a rounding error on the 40% of money that was printed by the Federal Reserve. Federal Reserve operates independently from the federal government. Those aren't the same thing.
It's a bank.
It's a bank that regulates the financial system, but it is not managed. It's overseen by Congress, but it's not managed. They're operating independent of one another.
So that 40% that was printed over the past 2 years, does that come into the economy by way of stimulus packages? Is that part of it?
Because they're buying the government's debt, partly.
What do you mean?
So the Federal Reserve owns a lot of the Treasury's debt.
Okay.
Just to make it more confusing. No, that one I'll give you.
Okay, so they basically gave money to the federal government to purchase more of their debt. So, I mean, at the end of the day, correct me if I'm wrong, like the Federal Reserve is kind of like the mob. Like they don't answer to anyone, and they kind of pull the purse strings on the United States government.
Yep.
So part of that is the money's coming into the ecosystem by giving money to the federal government, taking on their debt, which gives them more power. But also they lend to the banks as well, correct? Like the Federal Reserve will give money to the banks to then lend out to
lend
people.
Into the system. Yeah.
It's crazy because when you really stop and think about it, it's like if I make pens and my market calls for 100 pens a week, but I print 200 pens, the value of my pen has gone down by 50%.
I understand that.
Right, which is the problem that's happening. So the value of, go back to when we were shut down. This could be terrible. But when
at least he prefaced it, unlike I do.
Well, here's the problem. I know you better than he does, which means I think I can explain this in a way that might be a little bit, because he hadn't had the time to get to know you better. Let me, hopefully this will do it.
I promise you ain't going to have it.
So when the whole world shut down, you would go to the grocery store, and what happened to the price of like beef, shrimp, like proteins?
Went up.
No, they went down.
See,
when the whole world first shut down, the price of meat went down because the restaurants were closed, which meant there was an influx of meat in the grocery stores.
Okay.
So the price of meat goes down because there's too much of it, and the market wants you to buy more of it because of that. So that's what happened to me. Is I ate nothing but shrimp and steak for.
Is that how you got
6
gout?
months. I got the gout. Yeah, I got a gout flare up from it. It was nuts. But so now there's.
I just put on 15 pounds.
Oh, it was great.
I said, what the fuck is going on? He goes, I just can't stop eating shrimp.
It was so cheap.
It's like I can get to 8 pounds for like $4.
It was amazing. But then you have an over-regulation of that where now there's a shortage because there's been an influx of it in the market. Well, now you have to look at what's happening with it. It's you can't just make a new cow every 2 weeks. It takes time.
Well, and you have the most complex supply chains where you're getting one part from Canada, one part from Mexico, one part from China.
Right.
And so you it's like a train's going down the track, right?
Mhm.
If you stop the first, the locomotive,
Right.
like what's happening to all of those other parts?
Well,
right?
and
they're going to hit at the same force, and that takes a while to clean up.
well, I mean, you look at so Jack Daniels. You told me that used to be your drink of choice.
John Daniels.
Yeah. Okay. But so Tennessee. Okay, Tennessee wasn't shut down the same way that other states were shut down. They were still producing. Now, granted, they started producing it, a decade ago because it takes time to produce that. But they were still unloading barrels and prepping this to be sent to market. But they shut down, I believe it was in Ohio or Indiana, the glass factories.
Yeah.
They shut down the glass factories where all of the bottles were made. So there was a backup on Jack Daniels. It's what's happening right now with baby formula.
Yeah, everything.
Like there's, there was some sort of bacterial issue. The factories are shut down. They could still make it other places. But there's just not enough for the market.
Just FYI, the baby formula factory, I forget who actually owns it. They were shut down for regulatory reasons.
Yeah.
Apparently, they did something goofy and screwy. They fixed it. They sent the FDA a letter, and the FDA did not respond for 5 weeks.
Nice.
Why does that happen? Why does like? And
Are
then
you
you
asking me?
Are you
I'm
asking
just
why
asking
the government is
generally.
not
Okay.
efficient?
Well, I mean, look. That's one of the. So why you guys are explaining all this to me? It seems like anybody in your situation, like in March of 2020, when you're like, hey, they're gonna print all this goddamn money, like this. I know one of two things is gonna happen, or are you like, I know one of 18 things that could happen?
The future is just it's a probability distribution, right? Like there is at times of stress and craziness, there's a wide distribution, right? If you look at like people's confidence in the future, like what it would look like, the surveys would tell you that they were the highest the year before 9/11 and the year before the financial crisis. So usually, like we're just take the opposite, right? When people are really, really bearish and everyone's negative and the world's going to hell in a handbasket, wherever, historically, that's been a good time to buy, right? Not always,
because you want to buy shit to make the pain easier.
Because it's cheap.
Yeah,
right. It's cheap. Right. So, Buffett's line is pretty good. It's just be fearful when people are greedy and be greedy when people are fearful. And so, it comes back to emotion as much as anything else. But historically, market cycles are predicated by a shock and then panic. And then, before the Federal Reserve, the reason it was created was because there was no game in town to prevent things from falling off an absolute cliff. So if you go back to the early 1900s, so going back to the founding, that Hamilton and all those guys were fighting over if we wanted a national
we want a bank. Yeah.
Right. So this is like not a new argument about the pros and cons. But in early 1900s,
you need debt to borrow, right?
Yeah.
Okay.
So, but J.P. Morgan stepped into a financial panic, like the guy. J.P. Morgan was
okay,
and he backstopped banks from failing and saved the country from completely falling apart. And then everyone was like, you know what? We should probably have a bank to do that, so guy doesn't have to do it.
But can't there be an argument to be made that like because J.P. Morgan's doing really well, can't there be an argument to be made that like if we don't give them a parachute, it incentivizes?
I'm talking about the person. Like
that's what I'm saying too. So his generationally, what he started. I mean, look, you were telling me in 2008 they didn't even need the money. They didn't want to take it, right? So if he stepped in to save it from falling apart, isn't that what's supposed to happen instead of now?
Are you going to bet that somebody does?
Look, shit happens.
Depressions,
it seems like
depressions and panics back then were all like, those were violent, right? People were starving, murder rates are going up, and like, there's still certainly that today.
Seems pretty close to today, Mike.
But if you look at
we're going to see over the next couple months.
Look at 1929, right? The employment rates up.
Now, I'm not arguing with
20.
you against it. Yeah, I'm not like trying to be a dick about this.
There's bread lines and everything. Like, it's just you having a backstop in those times was certainly made sense.
So was the Federal,
that's all.
So was the Federal Reserve there for the Great Depression? Was it there? Yeah. So when did that start?
Well, and they didn't 1900s. I want to say it was like that was 1907 or 1930.
Was the Federal Reserve?
That was when they started after that panic.
Who was the president that time? Did we know?
Roosevelt.
Was it Roosevelt?
Yeah.
Or was it Hoover or somebody? Because one of them
Hoover was later.
Because one of them said that
Hoover was during the Depression.
Didn't one of them say that the Federal Reserve was one of my greatest mistakes that I've ever made? I think one of them said that.
I don't know.
So, I mean, to my point, though, we got out of whatever that was because of American ingenuity.
Wow. And a war.
No. J.P. Morgan, right? So J.P. Morgan came in and saved the other. I mean, in essence, that's what he did, right? He stopped the country from falling apart.
Right.
You know, isn't
but do you want, the most?
I'm not arguing for or against it.
I'm not either. Yeah. I think everything's pros and cons, right? Everything's trade-offs. And so they said we should have an entity that exists that can prevent this from happening again. And that's how the Federal Reserve started.
I don't know. Look, Ron Paul said it should go away. That's all I remember from Ron Paul's campaign.
He did not like the Fed.
Here's the thing: it's all just a game of percentages. Like, everything is a game of percentages. Like,
I hear
somebody
ya.
could say, listen, if you take this vitamin, okay, your percentage, your chance of getting XYZ illness is this, but your chance of adverse reaction is this, versus not taking it. It's all cost benefit analysis. Like, it all just, when Phoenix was diagnosed with cancer, we had to give him certain things. Chemo destroys the human body.
Yeah,
it's what it does. It destroys cancer cells, but it takes other things along the way. And so you have to make a calculated risk on, are you going to do it?
Here's the thing, man. I didn't know J.P. Morgan did that until you just told me. And then I'm like, that's the way it should be.
That's the way it should be.
That's just
not
my
the safest bet.
What if we don't have somebody wealthy enough to backstop it?
Right.
Well, I mean, that's
do you
another
understand
thing
how
too.
unbelievably wealthy somebody would have
to be?
And
Do we want
okay.
people that wealthy?
So how wealthy? I don't know how
Elon
wealthy.
Musk is trying to buy Twitter, and people are losing their minds because one person shouldn't have that much control. And it's just an app.
But how much money did that guy have at the time? I mean, like, comparatively, would it be trillions?
He'd be like the Bezos type deals. He was a like, and now there was a wealth inequality problem then too, where in many ways that was a similar time.
There was no. I don't even think there was unions back then. Was
there?
They
didn't. That was Teddy Roosevelt was also the sort of monopoly buster, quote unquote.
Mm-hmm.
You can argue like how much he did or didn't do, but that was when everyone was like, all right, we have, you had Rockefeller with Standard Oil, you had J.P. Morgan, you had Carnegie, right, and all these people who just accumulated so much power and influence that they started breaking them up.
Oh wait, I remember when the Federal Reserve started. 3 of the dudes on the Titanic were on their way back to stop the Federal Reserve. That's what I remember. Who was it? Astor, and like 2 other people. I forget were on their way back.
I don't know that.
Yeah,
story.
that was 1912. So
yeah, it was around 1912, 1913. I think that's when the Federal Reserve started.
Yeah.
Okay. So to today, right? For the average, normal, everyday, abnormal, person who isn't, running a bank or up there on that, like, they see whatever's going on as like, there's a lot of people who are thinking doom and gloom. What is there any parallels in history to this, or is this just new territory that has never?
Yeah, no, I think history certainly rhymes, doesn't repeat itself, but it rhymes.
That's a nice way of saying it. I think it's a great way to say that.
That's not mine. But
Michael said that. That's his
trademark.
I think that's a well-known. That's
the first time I heard it. You said it. Yeah.
But so one that is being thrown around by certain people in the sort of investment community, macroeconomic community, is the 1930s. So coming out of an economic shock, lots of bad macroeconomic headwinds facing us. And then also you had the rise of an emerging power in the world economically, at that time being the United States.
Okay. I was going to say Germany.
At that time being the United States, and then the fading world power, which at that time was Great Britain. Now you have it in similar terms where you have China, theoretically sort of like, on the upswing as a rising economic power, and the United States declining. And over time, that's going to have to rectify itself in one form or another, right? The second one is the 1970s. And the 1970s was runaway inflation. So way worse, right now we're at 7-8, ish% on inflation year over year. That was well over 14 at the time.
In the 70s? Was that when the gas lines were like just crazy?
So there was the I think it was the Yom Kippur War. That started a gas, an oil embargo. And so that led
was that in Israel? Like, what's the Yom Kippur?
In the Middle East, yeah. So, not an expert in that war, but that was what caused an oil shock. And there was runaway inflation partially from Nixon and the policies for the guns and butter. So they had to pay. Guns and butter was LBJ's big economic policy, where they were going to pay for sort of everything in, Vietnam.
Yeah.
And the Cold War, right?
Yeah.
And then they were going to do all their social programs. So that was really expensive.
Can you imagine that policy today? The guns and butter policy? Can you imagine that?
Very folksy.
Build back better.
So that was there
with butter.
So that was that caused inflation. The stock market crashed in the 70s.
Yeah,
interest rates had to go up, but they didn't know how to really fight it at that time. So it wasn't until early 80s, Paul Volcker comes in the Federal Reserve. He raises interest rates up to 20%.
Was he the chairman?
Yeah.
He came in as a chairman?
Yeah, and he said
to really put a stop to all of that.
He's like, this is nuts. We're stopping inflation no matter how bad it gets. And you got to give him a lot of credit, because it got painful in the early 80s.
Yeah.
But they stopped inflation, and then the economy took off, right, in the mid to late 80s into the 90s. So those are kind of the two ones in terms of the United States. But in general, these debt cycles and these longer term cycles, you can find every 30 to 100 years this type of thing is happening, and this is our version.
But is this the first? Is every country having this
at different times?
No,
different
currently.
Ways.
No.
So who's doing well?
So the way I've heard it described that was interesting to me was you have Japan and Europe that are kind of like economic senior citizens. So
they both have their own.
They just kind of do
stock
their own
market
thing.
type things, don't they?
Well, they're they do. But just if you look at sort of them independently, they're kind of senior citizens. They're sort of feeble. There's not a lot of dynamic growth there. Their demographics aren't great. So that's an aging population with not a lot of kids coming up behind it, right? You have the United States. So we're sort of
even Europe is like that too. They don't have a lot of kids.
Yeah, they're sort of terrible economic environment there.
They're not good at reproducing.
Well, it's honestly, the demographics is a really interesting thing, but it's a really scary problem too. But then you have us. I would say the analogy would be we're sort of middle aged, very healthy, whatever. But it's fair to say that
starting to slow down.
We're not going to be as dynamic economically as we were in the last 50 years. And then you have China, who's kind of this unpredictable, preteen. No one really knows what to make of it. Their system's different. How's that going to work? No one knows. And that's kind of how you could look at the developed world in terms of the economy.
Do you think that America is on the whatever rah-rah we thought we were in the 70s and the 80s and post World War II, greatest generation, stuff like that, manufacturing? How do you place us if that was let's say that's 100, Are we still at 100?
I think it's just like it's apples and oranges. Like coming out of the decades after World War II, no one could manufacture anything. So of course we were the center of the manufacturing world, right? Like,
because everything looked like they were bombed.
Yeah, and like we came back, all of our soldiers came back. They built houses in the suburbs. They created
kids.
Like the GI Bill gave them access to mortgages. So like we were like it was booming. But a lot of that is post World War II. Now the thing that we have that this is going into editorial. From sort of like economic history.
Right.
The thing that we have is we have a system that historically has been just so resilient to shock, both, internal and external shocks.
Like we can handle a trauma.
Yeah.
Yeah.
And what would scare me now is when you look around to your, point when we were just messing around earlier, like no one's really listening to each other. Like, can we handle a shock like we have historically? But we still have the most dynamic capital markets, the most dynamic sort of resilient system. And I think at the end of the day, like that's what carries the day. And if you look at world history, like autocratic regimes eventually collapse from within always. Now, a lot of countries and empires, they decline internally too, because if you look at Rome, a lot of that was overspending and not minding the store. So
the fall of Rome was just like, we'll just spend money on it.
They had expanded so much, and there was so much they were, maintaining, and then there was infighting politically, and it was just like it was time, and that's kind of how it's sort of over a long period of time, and then
the
all
fall
at
of
once.
Rome. Was the fall of Rome like Friday it was good and Saturday it was bad, or?
I think, like, if you look at the Soviet Union, right, like they were kind of crumbling from within for a long time.
Yeah.
But like overnight, it was like, okay, we're done. And so
turn off the lights.
Well, think about like a business. Like you could have a business that's struggling for
and you're pulling
years.
the cash flow out of it when you should be investing it back in.
Exactly. And then all of a sudden, it's like, wait, this thing closed? It looks like it's overnight from the outside. From the inside, it's happening over a long time.
Yeah, or like going back to that instant
you die in an
gratification.
instant, you're dying for years.
Right. Or like, you eat unhealthy or you don't work out or whatever for 30 years. Like that's compounding. You may not see it. Right. And then all of a sudden you're like, I don't fit in a large anymore. Right. Like, but that was going on for a while just because you didn't notice it.
Nobody told me that.
So what you're saying is eating nothing but steak and shrimp for months on end
gives you gout.
Not good for your feet.
So how do you are you, on a personal note, are you optimistic, pessimistic, ambivalent about what is going, like
watching and waiting?
Or how important is watching and waiting, not making a decision at all yet?
Regarding what?
Anything. Whether you want to get Big Macs? No, I'm kidding.
What I always say, this is from this guy, Morgan Housel, you need to save like a pessimist and you need to invest like an optimist. And that's how I operate when it comes to the economy and investing. So in the short term, you should think like a pessimist. In the long term, history tells you that things move in cycles, and everything from countries and empires and debt cycles and all of that. But generally, it's like the stock market, right? Like it doesn't go straight up. Like there's a lot of pain along the way, but it goes up and to the right if you zoom out. So like, what does that look like? I don't know, but I'm optimistic in the long term for sure. I think you have to be if you look at and understand history.
You just think like we might be in for a painful year or two or three or four.
And maybe that doesn't even happen for 10 years. I think.
What do you mean? Like 10 years from now, it's like, it got shitty.
Crazy things can go on for a really long time. I think that at some point there has to be
like a come to Jesus,
like a reset. Whether that's
don't say that.
So it's usually economic, or it's a war, or it's
America loves those.
It's a pandemic.
That's why you invest in Halliburton, guys.
What if it's a great reset? I wouldn't bring it up.
I don't know what that means.
Don't play into it.
But
means?
I'm not opening the box. There.
You don't know what that means? Oh, the guy wrote a book about it.
I think
Klaus Schwab.
Schwab, yeah.
I think that we as humans are really self-centered, and we look at what's happening right in front of us as so profound and so important and so,
because
this is the first time, right? Because this is the time period in which we were born and live.
Right.
Right. And so we get all the benefits and we get all the sort of downside of that. But like zoom out, this was going on for thousands of years. Like this is all cyclical.
Yeah.
And so it doesn't bother me because like, look at like that. We talked about the Depression before. People got through it. People had birthday parties. People went back to work. They had
I think
great
people
lives.
forget about stuff like that.
Like they were living so much harder than we were. So I just tried to like put it into context, and then I stopped complaining and bitching, which is just makes you more of an optimist.
I think look, number one, that's an absolutely great way to look at it. And I think it's hard. I think it's hard for people like me who's like their whole life I've been fucking Eeyore. You know what I mean? Where it's like not much of a tale anyway. And it's hard to. I try to remain optimistic, and then I see like
that doesn't mean, by the way, like I'm hunky dory.
No. If you're shitting sunshine, I'm really concerned about.
Yeah, right. And so like, but it's just context. I think context and understanding history, we're not very good at it, and I don't think humans have ever been good at that. Right, like because it's right in front of us, and if I lose my job today, or I don't have enough gas in the car, like that's important, right? But in the scheme of humanity, it's not that important.
It's happened before. It'll happen again.
It's going to happen again too. Yeah.
I'm just okay. So your dad was here earlier, right? And he was in politics. Is there a future for you in that? Or are you like, no, not a chance?
No, I don't think so. I think there is certainly a role I'd want to play locally to make it better.
Not even like city council?
No, it's terrible.
I live in Dunmore, thankfully.
Dunmore Council? Yeah. He isn't. Who's your mayor?
Max Conway.
Max, he's the best.
Yeah, good dude.
Max is a great guy.
Yeah, I'm actually an independent.
Are you? Oh, so you can't vote in primaries.
So I'm kind of boxed out in Dunmore.
Would you be in favor of an open primary in the state of Pennsylvania?
Yeah. I think, and I don't want to get too into politics, but I think in general, it's hard to argue against open primaries and, straightening out gerrymandering.
Is that like redistricting? And,
if you do those two things a little more straightforward, you give a voice to the middle. And I think that most people are in the middle.
Do you think that they're not, sorry, I didn't mean to cut you off.
Well, no, I was just going to say, like, with all the talk about voter suppression and all this, craziness that's happened over the past 2 years, it occurred to me, a few days ago, because I am an independent, I can only vote half as much as somebody who's a Republican or a Democrat.
Yeah.
And the problem is, though, the primaries are where the action is, because that's determining
the final two.
Yeah. And it's like, wait, these are my options. Yeah. These are my options. So, yeah, I mean, it's hard. I think most people are in the middle. I think the parties are essentially functioning as cartels right now. So they are serving.
Okay. So when you say cartel, people think of it. I don't think they really know the definition of a cartel, because I don't think
fair, not a Mexican.
Right.
Cartel.
I don't think it's
no,
Colombia.
It's they're serving like, so if you look at the social media companies right now.
Yeah.
Right. They began to serve their own interests over the interests of the users at some point. And then, as the entity becomes bigger, it becomes self-reliant and self-sufficient, where it has to protect itself and its well-being over the sort of the broader population, right? So that entity is trying to protect itself, and that's why their data on teen suicide and whatever else they're not like running and reporting that's staying internal. But if you look at any entity, that's what it does. And right now, the two-party system has become that. And that's not a good. That doesn't lead to good outcomes, and I think we're seeing that.
So if the parties were stocks,
you put them in buckets.
What would you?
I'm not going down that road.
You won't make it. You can't make a science fiction prediction.
No.
Is that outside of compliance?
That's just my own decision because it's why I'm trying to build a business. I'm going to piss half the people.
Oh
off.
no, I didn't. Okay, all right. So basically, what I meant was like this two-party system is like should like the investment in it. Like what's the long-term forecast for like what it is?
Yeah,
that might be more what I meant.
Yeah, I don't know. I think like
what's the 10-year
if it's like right now we're careening towards a cliff. And there's two people in the driver's seat who'd rather get control of the wheel
than drive off, than turn left,
than stop the car.
Yeah,
right, or turn around. And
so what you're saying is both sides suck.
I'll
say it.
No one has shown the fortitude. To want to solve problems. Yeah. And
they're fighting for their party, not for the people.
And that's been going on for a while. So when I interned in Congress, I had to write. I worked.
You interned in Congress?
That was what I was saying on Capitol Hill. So
I thought you were just like immediately. So wait.
So
what'd you do there?
I worked for a congressman. His name was Bill Schuster. He was a Republican from Pennsylvania. So you got to sign a congressman. Altoona.
Okay. Where carnies go to retire. I went to Penn State. I went to a Penn State party down there. I was like, "This is a weird town."
Yeah, Altoona's. Yeah. It's a lot like Northeastern PA in some ways.
Shh, I didn't want to say that.
But so anyway, I worked there, and what I wrote my term paper on was the rise of how, and I was probably the biggest understatement ever, but how cable news was leading to a more partisan Congress because we were just going towards the
extremes of both sides,
because all they were doing was going to the super voters who would show up in primaries, and then that just led, that was sort of started,
and then you neglect all the other people.
Yeah, so I think like that was sort of the mid '90s when that really started, and obviously social media is like throwing like gasoline on the fire with that, and the internet in general. So I think that if you solve that and people have to start going to cocktail parties and
talking to each other,
coffee, and you want to solve the problem, right?
I mean, do you think that? So, wait, I never knew this about you. This is so interesting. You wrote a term paper.
Yeah, so you wrote like a 20-page paper, and you worked in Congress full time.
So that was
the semester.
So you saw this.
It was early, but I just saw where they were focused on their time, and it wasn't towards and Schuster was a good legislator, and he was a great guy, and he had a good career in Washington for sure. Like, I'm not saying anybody individually. I just saw cable news was just so important because they were speaking to those bases in the beginning, and they wanted to win their little games versus governing in a bipartisan
way.
way.
It's almost like a cable news proxy war.
Now it's even it's
now they're not even trying to hide it.
Now they have 7 avenues instead of 3 cable news channels. They have all the social media. They have YouTube. They have direct email campaigns. They have all the data and the algorithms that come with that. So back then they were fighting with sticks. They were fighting with sticks. Like now they have real weapons.
So when you were down there, did you see people who would behave much differently on camera than they would when the cameras are off? Is that what kind of be like, hey man, something's weird here?
I mean, I was an intern, so I wasn't.
Yeah, but you can still observe.
Yeah, I thought, I remember one time that there was a bill in committee, and I even forget if it was the Republicans or the Democrats that controlled the committee, but they didn't like what the other side had done in another committee. And so this bill that was pretty important, my guy had worked on it substantially, and we wanted it to get to the floor, and they kept it in committee out of spite. And I was just like, what? That doesn't make any sense.
You guys made me mad.
You guys are supposed to be the adults. And that was a pretty important like I noticed, like that was like, something's off here.
Yeah, this is not supposed to be.
And like, you know, there's always political fighting, and like, again, looking at history, like there was guys after the Civil War, like they were beating each other up with canes, and like it was ugly.
Well, Andrew Jackson was doing duels. I think didn't he get shot like 18 times or something doing duels?
It's always been that way, and I mean,
I think we should go back to that.
I mean, yeah, I'm super pro going back to duels, but I think what's going to end up happening is I think it's going to split into 3 or 4 parties, maybe even 5. And now I don't know if it'll happen in the next decade or 2. But I think it almost has to for the survival of the country. I think, you know, the entrenchment of the D's versus the R's, you're already starting to see it a little bit. You're starting to see, like, you know, the old school Republicans, the Mitt Romneys, the George Bushes, the McCains, and then this new wave of whatever Donald Trump brought in. It's like you started to see that split within the Republican Party. And then you look at the Democratic Party and you're kind of, you know, you're old school. You know, Bill Clinton, and, you know, I think even through Obama a little bit, but I think Obama was kind of the crux of what started to split the Democrat Party. And now you have people that are Democratic socialists and then kind of the old school Democrats. And I think it's kind of, you have those more, you know, far out there wings. And I think you even see the infighting with the Republican Party. I mean, you know,
I see it every day.
Yeah, I mean, like you see like these people that are like, oh, we got to primary this person, you know, and then you see it within the Democratic Party, and it's, you know, oh, well, this person isn't like a real progressive, you know, they're not, you know, and, you know, the Bernie Sanders versus the Joe Bidens, and, you know, you see all that happening, and the 10, 15, 20% on the outsides on the of both parties at some point are going to have to break off.
But I agree with that. I think that the 15 to 20% always existed. I think they've become more and more extreme. And I also think that, like, this is about like there's a tribalism, right? So human nature is how we identify. And we used to identify as Americans, right? Or you had the church, and you had, you know, civic organizations, and you had Dunmore football games, and you had all these things, right?
And you had better teams like the Scranton Knights.
in what?
Well, let's talk about this year.
I couldn't laugh. I had water in my mouth.
Yeah. I mean, what? Both were always better than Addington. So I mean, there's that.
Oh, shut up.
But you had these identities, and as those have gone down, you know, this like we need to grab onto something.
Yeah.
And these institutions that have just kind of been like, you know, fallen by the wayside through their own fault and through the evolution of society and whatever. And so what people still need that identity. Like, we're still human. And so they're just grabbing on to these political identities where American isn't coming first. And until.
So what you're saying is a good campaign slogan would be like America First. No, but you're absolutely right though. Like, like I feel it all the time. Like a couple of days ago, it's like, I love election day. Like, for me, like, I love being an American. I've lived all over the world. I love being an American. I've seen other people do it. For all of our faults, we're still the greatest idea that ever happened, and we're trying to perfect it. But, you know, on that day, I can't vote. I don't have a home. You know, so for me, when it comes to politics, I don't have a team.
Right.
I'm kind of out there winging it by myself because, you know, it's like we've talked about this before. We've talked about like somebody going into politics as an independent. It's an unscalable mountain. Right. You don't have the finances. You don't have the group. You don't have the identity. All you have is yourself.
Yeah.
And that's the problem is I feel it almost feels like, you know, maybe like the Federal Reserve's become too strong. I don't know. But like the parties have become too strong.
Yeah, that was why I used that, like, cartel is like, like, if you're not with us, you're against us. Right. And that's it. Like, we're not going to have a conversation about it.
Another way to say it is, if you keep talking about how bad West Democrats are, then we'll stop supporting your businesses.
You know, there's a state senator that said that. I forget his name. You're really mad at him.
Yeah.
It's while you guys were talking about that, like, I just thought about it in my head. I like metaphors or analogies or anything like that. It seems like this might sound stupid as shit, but it seems as simple as a mom turns on the water in her house to give the baby a bath and then goes outside and hates the neighbors so much that they just end up arguing for 2 hours and her fucking house gets destroyed because she's more worried about arguing with the neighbor about something stupid.
Darker.
I thought there was going to be a drowning baby.
No, you don't argue. Always be with the baby.
Okay, let's not go that route.
All right, you got to get out of here. 2 quick things.
Yeah.
How did you get involved at Lackawanna, and what do you do there at the college?
So when I worked at Brown Brothers, Harriman in Philly. It's the oldest private bank in the country. They're still privately owned, managed, and it's a great firm. Loved it there. When we decided to move home, which was during all of this, so I came in 20.
You left Philly to come here, right?
Yeah.
Is that what happened? Okay.
Yeah, and part of it was I had started to get to know the team at Alliance, and part of it was because the minimums at Brown Brothers Harriman as a private bank it was $10 million in investable assets
to get started,
to have a relationship where we were managing your money.
That's a very large bucket.
Is that like Naomi Campbell being like, I don't leave my house?
Well, they don't need financial planning. It's just spend it if you want, right?
Yeah.
Sounds like a cushy job.
But it's such a good investment house, and they've been around for 200 years, and they stayed private, and they stay out of the media, and they do things right. However, most of the people that I know and care about don't have $10 million in investable assets.
Right.
So I would often have conversations with Alliance if a need came up, somebody I knew, and I loved the way they did business. I loved the way they operated, and eventually started having conversations with them. And part of what I loved about the idea of joining Alliance was focusing on this investor education that we talked about and giving people the tools they need and sort of leading with that value versus leading with product, and being able to choose the clients that I want to work with, right? And be a business owner. And so that was why I did it. And as part of my time with Alliance, I was putting together presentations and I'm speaking and I was doing webinars and whatever.
Did you ever want to do that, or did you just get thrown into it, or did you offer to do that?
What?
Like be in the public, talk to, you know what I mean?
Yeah, I enjoy it.
Okay.
And I think that the message isn't being like it's not being done well, and it's a way for us to help, and it's a way for us to stand out, where we're saying, look, here's the information, right? Go with us, don't go with us, but here's the information. That will lead to good outcomes for us over time. I'm convinced of it, and that's what I'm doing. But then Lackawanna, I knew Erica from a board that we're on, and so I had known her a little bit. And Jill Murray wrote an op-ed in the Times, and she said, essentially, stop with the inferiority complex in Northeastern Pennsylvania. Like, we are as good as anywhere. We can be as good as anywhere. Like, stop with the negative and let's focus on the positive. That was like the message.
What was she speaking to in a roundabout way?
She was
just the tone of people's.
Yeah,
okay.
Yeah.
Okay.
How the area frames itself.
Yeah.
Was the point of the op-ed.
I heard somebody say once, if everybody woke up tomorrow and the streets were lined in horse shit, people would buy taller boots. That's how they explain the mentality of Scranton to me. It's like, oh, we're just always getting screwed.
Yeah, and that could be another episode as to like why and how and all that.
I would love to talk about that.
It's very interesting. But when I read that, I emailed Erica and I said, here's what I'm doing. Yeah, I think you guys are taking a different approach to higher ed, which is its own problem and its own cartel. And I think you're doing it differently. What Jill wrote, I couldn't agree more with. And if there's ever a role to be an adjunct professor, I'd love to do it. And that was how it started.
And then when did you start?
So I taught my first class this semester. We just had finals week 2 weeks ago.
Have you ever taught before?
No. No.
So were you scared shitless going in or what?
It was interesting. So it was, I wasn't. I was excited. It was like, it was out of the comfort zone for sure. I was definitely nervous the first day. And it was a group of student athletes. They were all football players, and it was mandatory that
if I screw up, they're all going to kick my ass.
But they had to pass the class to be eligible to play.
Yeah, sports eligible. Yeah,
and so it was great. It was the best professional experience I've ever had
in your life.
Yeah,
no shit.
Yeah, it was great.
That's awesome.
And we had good conversations after. I'm sure I'll stay in touch with some of them. Like they were good kids, and they need those tools.
Okay, so college kids, were they at the starting point that I'm at, or am I less?
Everyone that I meet with, I would say, is 65% of them has some version of a depreciating, like, look, I don't know anything about this. Like, just so you know, I'm really bad at it.
Yeah.
Everyone feels that way, and it's just because of a lack of exposure. But it doesn't take long for it to click. It's just a matter of finding, like we were saying, finding that language for it to click. And it doesn't matter if you're 18 or 60. It really doesn't.
So when I went to LA and I first started there, it was, I didn't know shit about shit. Like film school never got you prepared for like your first job when you're like, make all these things. But as soon as somebody showed me, like, here's what this is, here's what it goes to, here's what it's for, stuff like that just starts clicking with me. I got to see it.
Yeah. Yeah. It's like that experiential learning of getting your hands dirty is important, and it doesn't matter.
Do people shadow you? About. Can I come down to Alliance and just sit and watch you?
No. For so many reasons. Well, thanks for having me, guys. This was great, and it was great to meet you.
Very good to meet you, man.
Dan doesn't speak much unless.
What was the name of the book that you mentioned earlier? You said it was kind of like a history of finance through American history.
Inside Money is the book.
And can you tell me real quick about Alliance Wealth Investors or Advisors, where to get in touch with them? Do you guys have website, email, social?
We have a website. I actually have a weekly blog. That's it. Yeah, Zachary Carabell. I have a weekly email blog that I send to my clients and people in my network where I sort of take a complex topic, and
try to dilute it down for somebody like me.
So the last one was called The Bear Necessities, and it was just about like what a bear market is and what to do in it. And I do that every week, and we manage. We have over $375 million in assets under management
That's unbelievable.
We manage on behalf of clients. We're headquartered right in downtown Scranton.
Would you get 37 $10 million people?
What's that?
Would you get 37 $10 million?
No, it's a little different makeup than it used to be, and that's the way we want it too. But the business and my partners they're great guys who also at some point made a decision that they wanted to do it their own way.
Mm-hmm.
And to this conversation too, we've put our flag in the ground in Scranton, just like you guys have, where we could work from home or we can have an office, anywhere, and we're downtown and we're staying downtown, and there's a reason for that.
And how do people get in touch with you?
So my email is just mike@alliancewealthadvisors.com. Our website is alliancewealthadvisors.com. If you give us a Google, reach out. I think, for people who've never had those types of conversations, they get intimidated. They think they're going to, somebody's going to make them sign something. And, like most of my conversations are coffee or lunch or whatever. And, I want to hear sort of your story, what keeps you up at night, and then do we have the resources that can help that? It's that simple.
Did you have fun?
Oh yeah.
Did you have fun?
Tons.
Did you think it was going to be a shit show, or what did you think was going to happen?
No, this was great. Is it everything
everything
I dreamed?
Okay, perfect. Dan, you want to say it?
Sure. What a week.
What is that?
That was the closing at the New York Stock Exchange.
Beautiful.
Oh,
that was funny.
God.